With the recent fall of the Bitcoin market, it goes without saying that altcoin investors have been feeling less than confident about the future of their investments. But is there really anything to worry about? Well, join us as we investigate what is meant by the so-called crypto flash crash and whether this is something crypto heads should be terrified of. The origins of Bitcoin. Before diving right into the reasons behind the rapid fall in the value of Bitcoin over the last few days, it's important to first understand the origins of the cryptocurrency and how the volatile market often changes. For those of you who don't know, Bitcoin is pretty much the father of all altcoins and is considered by many to be the closest that any investor will find to a blue chip cryptocurrency. It's mostly due to the global recognition of the digital currency right now and the fact that it is trusted above all other cryptos comes to exchanges for items and services. The story behind its creation is still steeped in mystery though. Essentially, it was brought into existence back in 2009 by a man who came to be known as Satoshi Nakamoto. But since this was nothing more than a placeholder name, the mystery as to who actually created the digital currency remains alive. As it turns out, the purpose of creating a decentralized digital currency like Bitcoin had a lot to do with the making of online cross-border purchases easier. Rather than paying the extra bank costs associated with the exchange of currencies and having to work out the amount owed for yourself, Bitcoin would allow for the cheap and quick purchases of cross-border purchases. But since not many trusted the crypto market, it only found use on the dark web. Things changed in December of 2017 though, when the value of the crypto skyrocketed, causing holders of Bitcoin to become incredibly wealthy in just a short amount of time. It was at this point that people realized just how useful Bitcoin and cryptocurrencies in general could be, not just as a decentralized currency, but an investment scheme as well. In order to invest successfully though, you have to understand the overall volatility of the market. You see, the value in an altcoin will rise when more people have faith in its worth and acquire a portion in it. In the same breath, the value of a crypto like Bitcoin will fall when more holders decide to sell. In this way, the cryptocurrency market is in a constant state of fluctuation, which is what makes investing in the scheme incredibly risky, but pretty lucrative if luck is on your side. In more technical terms, there is a constant state of flow between a bear and bull market when it comes to Bitcoin. The value of Bitcoin is falling and more investors decide to sell before they're left with a valueless token. You can say that we've entered a bear market. But when the value of Bitcoin rises, causing many to acquire the token, a bull market is said to come into existence. It is the job of an investor to acquire tokens when at their cheapest and hold on to them until the bear market is transformed into a bullish one. That's really all you need to know in order to become a brilliant investor. Buy low and sell high. But what does this mean for the so-called Bitcoin flash crash that we've experienced over the last few days? The meaning behind the Bitcoin flash crash. Well, let's just say that Bitcoin hasn't been having the best of weeks. Seemingly out of nowhere, the whales who take pride in holding onto the crypto decided to sell off their interests, resulting in the decline of almost every crypto on the market. And as it turns out, the decline in value was steeper than the majority of us even understood at first. According to the experts at CoinMarketCap, the value of the entire cryptocurrency market ended up dropping by around $2.2 trillion last Tuesday, and a further $1.9 trillion on Wednesday. Bitcoin itself was registered at a value of about 17% lower than its usual reflection. So it goes without saying that investors were not very happy about what had happened to the market. As volatile as a cryptocurrency exchange could be, this was beyond ridiculous, which is why the steep decline was essentially given the name of the Bitcoin flash crash. What was the actual reason behind the Bitcoin flash crash though? According to analyst Katie Stockton, this was nothing more than the volatile market making a name for itself again. Investing in crypto is incredibly risky after all. Now we know why. But it must be said that the government of El Salvador too played a vital role when it came to the massive decline in valuation of Bitcoin. Last week, Tuesday, also saw the country becoming the first to embrace Bitcoin as a legal tender, with the president making the announcement that each and every citizen would be given around $30 worth of the crypto to be loaded onto a government-sanctioned digital wallet. The government of El Salvador thus ensured that they had bought in excess of 550 Bitcoins to be distributed, something that many investors would have expected to push up the value of Bitcoin, with the crypto being well on its way to becoming a blue chip investment. Even whistleblower Edward Snowden jumped in to congratulate El Salvador, summing the situation up as follows. Today, Bitcoin was formally recognized as legal tender in its first country. Beyond the headlines, there is now pressure on competing nations to acquire Bitcoin, even if only as a reserve asset, as its design massively incentivizes early adoption. Latecomers may regret hesitating. This wasn't the only headline revolving around Bitcoin, otherwise there's no way that the Bitcoin flash crash would have ever taken place. Unfortunately for holders of the crypto, regulation of the decentralized currency in Europe is still experiencing problematic results. According to the latest poll, for example, the majority of EU citizens would outright reject an EU-based crypto regulatory framework, preferring one where individual states regulate their own workings. The poll also went on to reveal that most voters knew next to nothing about cryptocurrencies in general, which added to the discomfort of introducing what has been called the digital euro. Crypto scams are on the rise. Suffice to say, this poll brought a lot of public attention to the workings of cryptocurrencies, causing many members of the public to realize that they don't actually have a lot of trust in decentralized currencies. More often than not, this is a result of an influx of crypto scams that have been making the rounds over the last few months. And when the public doesn't even know much about altcoins, falling into these scams is a lot easier than you may expect. Just recently, for example, we heard about the lashing that Kim Kardashian got from the United Kingdom's Financial Conduct Authority. Essentially, she'd advertised a new altcoin to her many followers, even though she had absolutely no idea that the crypto had been made just a month earlier by unknown developers. And this really shows the major problem that decentralized currencies are still having. Rather than being based on statistics and flow, tokens are bought based on celebrity and analyst endorsements. And since this cult-like buying has the tendency of screwing little investors like us, trust in crypto is at its lowest in years. This feeling of distrust has been made apparent in what is most likely led to the Bitcoin flash crash. But when it really comes down to it, Katie Stockton could also be correct by referring to the fact that this was just an ordinary decrease in value with the completion of the Bitcoin bull market. And if she is indeed correct, this tells us quite a bit about whether we should be worrying about our cryptos in the days to come. Cryptocurrencies will rise in value again. As we mentioned earlier, the crypto exchange is a volatile one, which is in constant flow between a bear and bull market. As of right now, regardless of what you call it, we are experiencing a Bitcoin bear market where investors are selling off their interests in an attempt to prevent themselves from losing as much value as possible. But if making money is your primary interest, holding is what you should actually be doing. You see, this bear market is what it is. Will most likely be followed by a bull market, leading to the massive increase in value of Bitcoin and its surrounding altcoins. We've seen this time again. Doesn't matter what the reason for a decrease in value is, as this decrease is almost always followed by an increase. In other words, if you have yet to purchase Bitcoin, there's no better time than now, with the crypto being worth about $15,000 less per token than it was at the beginning of the year. And since experts have estimated that the beginning of next year we'll see another meteoric rise in the crypto, we can't help but see the Bitcoin flash crash as an opportunity, rather than something to be stressed over. Even if you're currently an investor in Bitcoin who has lost a lot of money as a result of the crash, there's no point in worrying about it. Just because people on the scene have attached a name to this bear market doesn't mean that it's actually anything different from the other bear markets the crypto has bounced back from. So keep on holding and reject all advice to sell your tokens in an attempt to alleviate your financial losses. There's no doubt that things are going to return to normal in no time. And you wouldn't want to be the investor to sell off everything only to see the value rise in just a few months' time. What do you think of the Bitcoin flash crash?